in my mind, in my head, this is where we all came from. The dreams we had, the love we shared, this is what we're waiting for. And in my mind, in my head, this is where we all came from. The dreams we had, the love we shared, this is what we're waiting for. In my mind, in my head, this is where we all come. In my mind, in my head, this is where we all come. In my mind, in my head, this is where we all came from. The dreams we had, the love we shared, this is what we're waiting for.
What is going on YouTube? It's Brendan from Market Makers. Happy Thursday, everybody. Guys, my Tuesday video is over a half hour long. I know a lot of you like the long videos, but today's video is going to be short. We're just going to cover some key information on some key assets like the equities, like Bitcoin, and just cover the metals. I got a couple individual stocks, Tesla and Palantir, to look at as well. Key market dynamic, I guess I wouldn't say change, but now is confirmed. Obviously, the debt ceiling bill got through the House, and now the Senate will be voting on it. Because of that, you're having a reaction by the DXY. Look at this baby fall. Why would it fall? I know somebody's going to ask me that in the comments. It's falling because you're raising the debt ceiling, which means you're printing more money. Now juxtapose that with they're going to be issuing more treasuries to be able to raise more funds, which will drain liquidity from the market as well, because you could potentially have yields move higher on that, especially if there's no buyers. So lots of countermanding forces here. So this will be a market update. Guys, if you want to come hang out with me, come hang out with the other staff, come hang out with the 13,000 members, check out our Discord. We started that back in June of 21. We now have over 13,000 people on the server. So you can come join for free. You can try out SimpleFX or BingX. They will pay for your first month. That information is in the video description, as well as I'll pin it in the comments. Just message Lee in the Telegram once you do that, and you get a free month. I think you'll really enjoy it. I've had a lot of fun in the community chat section, posting some memes and just hanging out with everybody. Good times, guys. And yes, you do get live TA, you get live streams, you do get trade signals, all the normal stuff you would expect in a group of traders. All right, let's look at this. So DXY is dropping. Where could it go? I mean, the first retracement level is the 103 spot 302. Okay, you see this nice big bar drop here. We'll see if it can hold somewhere in this range, and if it starts bouncing back up, or if this is just going to start falling. It'll be interesting to see. Now, let's talk about the S&P first. This is a 3-day chart. Last time I left you, I told you I was building a short. 42.30 was my entry. I posted that in our Discord as well. Nice 60 bar drop. Okay, got down to 41.67, I think. So it's a nice 60 bar drop that all got given back up today here on this pump. Okay, the pump's at 42.20 right now. Now I want to show you a couple of things and talk about a couple of things real quick. So we have record shorts on the S&P going back to September of 2007. Now, when that news first broke that we had record shorts on the S&P was trading at 41.26. Now the S&P is at 42.20. Now what's interesting is as the S&P has climbed here since that news broke, they've added to their shorts each and every week along the way. So let's just put our thinking caps on here, viewing this as market makers. What are they looking at? What do you think the big money, aka what they call the smart money, but it's just big money, what are they looking at that they would keep adding to their shorts as retail is piling in the market? Showed you the retail chart last week. Lee, throw that chart up again. Retail is piling in, buying all the dips, trying to push this market up. Well, guys, the answer, and I went over this in detail last video, is the market breadth. Okay, this is a 3-day chart. Let's just look at this really quickly. I set this to the 5-day. Okay, this is on the 5-day here at the bottom of my screen. So the 5 simple moving average, this is tuned to the daily chart. We're looking at a 3-day chart, but I want you guys to see this. So right now, only 36% of companies are above their 5-day moving average. So 2/3 of companies are not even above the 5-day moving average in the S&P. And again, if you change this, it keeps dropping since last video. If you change this to the 20, just focusing here on the two more current moving averages, you change it to the 20, look at this. The 20, you have 28%. Let's call it 29%, 28.62. So again, you have 71% of the companies, almost 72% of the companies below their 20. Below their 20, and only a third of them are essentially above the 5, but price is moving up. So let's juxtapose this with the chart. Circled area, look at this. So this is a 20-day, keep in mind. When you were at this circled area on this trend rebound up to 43.11, 99% of the S&P was above the 20. Okay, look at all the highs here in the area. You'll see the same thing. Let's go ahead and look at this. This region here, 99% of the S&P was above the 20. Let's come over to here, this peak. Now here's where you had divergence. You had 99% of the S&P above the 20 here. Price kept rising as what happened? As companies kept falling below the 20, so it rolled over. Okay, this is exactly what I think is going to happen here on the S&P, because on our current pump off of this low, off of that 3,800 low, on that current pump, this right here is where you had 99% of the S&P above the 20. And as the S&P has done this, guys, as it's gone up, as retail has pushed this up and different hedge funds have rotated in the big tech, as they've pushed this up, look what you've done. Look what you've done here on the S&P. So you have this divergence of breadth. You went from 99% above the 20 to now you have 71% below the 20. So you can see the divergence. So can this go up? Remember, our upside risk, this is a simple fib retracement from the all-time high down to the October low. Hold on, let me turn my volume off here, guys. Sorry about that. But this is a simple fib retracement giving you the 43.11. With the trend-based fib, I have this at like 42.89, 4,300. But whatever, we'll just call it 4,300, okay? So to get back up here, we had 99% participation. Now, could you get up there without that kind of participation? Sure. It's breadth divergence. That's all it is, okay? So fewer people can push the prices up as high as they want to go. But what trading is, it's about probabilities and things rolling over. So you're at 42.21. We're at 42.34 last video where we shorted, and now you're coming back up, okay? So to me, that's the upside risk. This area where the pump fails is where I'm still interested in trading between, once again, 42.30 and 4,300 here for a longer term hold trade, a swing type trade. And this is also in confluence with what the big money is doing. They're building their shorts. You understand that? They've built their shorts this whole way up. They didn't cover them. They kept adding to their shorts as this moves up. Now, granted, they have billions of dollars. So, I mean, they can do that, right? But I just think this is your cap, guys. It was your cap last August. It's been tested a couple of times. Could it get tested again? Absolutely, it could get tested again. But this region up here is an area I'm willing to trade between where we are now, 42.20, and 4,300. Let's call it 4,300. So that's where I'm looking to build a trade. So I still have a partial trade on the market. It took some profits, and I'm just going to add if this does keep moving up. If not, it's going to roll over because the companies are all peeling off of the S&P. They're not participating in the rally. So I do think it has a cap. Let's go ahead and look at the NASDAQ. NASDAQ, guys, this is a trend-based fib projection. If you pull down from the all-time high, right, down to your market low, you're at the 618 or just above the 618 here. So there's a lot of fib confluence, but this is a 2.058. This is from geometric trading. And, the NASDAQ's at 14.4. Okay, so you're at 14.4 in the NASDAQ, and we look at some of our indicators here. You're the money flow is starting to show a little bit of bearish divergence here. But again, looking at the NASDAQ now, the NASDAQ breadth for above the 20, half the companies are below it. Okay, so you have this meteoric rise and half the companies are below it. And again, where did the NASDAQ have 99% participation? 99%, it had it down here. So all companies have done, covered this last video in more detail, is peel off as the AI tech companies have gone up. Other companies have peeled off. So it's just something that you should watch because doesn't mean the NASDAQ can't impulse higher, but what it does mean to me is that there's a cap on it and it's going to be putting in a top, building a distribution box wherever the pump stops. And again, I do think these will be the highs for the year. Wherever this pump stops and we get a serious retracement back from it, that will be your high. Let's look at Bitcoin. I told you we're moving fast today, guys. We got 9 minutes in. So Bitcoin's not participating. Very disappointing for a lot of us that want to keep trading Bitcoin because we traded it here, and we got these nice 13 to 20% moves. But really, you just have a series of lower highs here in the range. Now, notice you're holding the 786 here at 26,604. Got a small bounce above it, right? So you got some up thrust above this little mini cough range that we made, showed you last video. So guys, nothing's changed here for me on Bitcoin either, but let's just pull this stuff off. Let's do this. Let's just see with a simple fib retracement. I'd really watch this 28.5 at the 1 fib. This is the larger macro layout off this trend-based fib, right? And you can see here we wicked it beautifully, 30,962 before this collapse. So those are two key areas, but that's off a larger projection. Let's just look at this off a tighter projection, right? So I'm just going to take my impulsive move down here. And you can see the 618 at 28,302. Let me expand this so you can see this a little bit. 28,302 provided resistance for this rebound up, and then you fell back down. If you come back up, you want to watch 28,302. 28,984, then obviously your 1 fib, you're back in that range where we short it between 29 or between almost 30K and almost 31K. So those are the areas you want to watch. But Bitcoin's not participating in the rally right now, which is really interesting when you think about it because of how closely it's tied to tech. If we pull this from bouncing off the 200, our impulsive move here with our fib retracement, see where you got to. Land it right on the 382. You see that? That's what you fell below it. You're landed on the 382. That's at 26. Your 46 is at, what is that, 25, 459. 618's at 23, almost 24K. So those are your immediate levels below you, your immediate levels above you. I'm not interested in doing anything here because Bitcoin's not doing anything. And I know that sucks. And I know people want to trade. Now, granted, in our Discord, and I know many of you sitting at home, you probably trade on smaller time frames. 4 hour, 30 minutes, whatever. So yeah, there's definitely trades to be had in here, but from a swing trading perspective, this is why we trade up here and get these moves, okay? Want a bigger move. So right now it's not doing anything. Bitcoin needs to come up on top of Wyckoff, pivot out, or it's right here in the middle, or start testing the base, fall down, get your retest on the base and go down that way. But it's just holding its ground while the stocks are just kind of oozing back and forth. Let's look at the MFI and we'll bounce over to a couple of quick stocks, okay? So you're bearish on your daily MFI, right? So you see that in the price action as well. You'd have this wave pattern going on here. Again, you have your A, your B, and your C, and now you have your little rebound back up, okay? So I don't know if this will be the top. We'll see what the stocks do. I do think that they're going to be under a lot of pressure as they peel off, and fewer of the big stocks are going to be holding up the market. We went over those resistance levels last video. Guys, if you want that detail, go ahead and watch that video as well. Let's look at Tesla because Tesla is getting back to being more interesting. We traded Tesla. I shorted it originally up at 208, as you guys know. We got a 27% drop in Tesla. Shared this in our Discord, shared this on YouTube as well. 27% drop in Tesla. You're back towards that 208. All right. You're back towards the 208. You're at 206 right now. Again, this is off that trend-based fib layout, but when I do this with this double bottom structure, it comes out to the same numbers. Went over this last video as well. But when we look at this double bottom structure for your upside risk, you can see 208 is your 1272, and now it's the 1618 is 223. I would be more inclined. I mean, I would watch 208 because clearly we got a 27, almost 28% drop from 208. But obviously, if the NASDAQ stays a little bit more euphoric and Tesla keeps rebounding, you really want to watch between 208 and this says 223. Okay. So again, depending how people like how I trade, sometimes I scale into shorts, sometimes I scale into longs, or I just wait for it to hit a specific number and then I put a trade on a normal size trade. So there's different techniques here, but when the market's moving up, since Tesla's rebounding, I would definitely watch this because it's getting really close to that lower level target entry, 208, where it struggled before before it had this nice drop. Okay. So watch that. And then the golden target or the golden ratio there is 223. And where is my MFI? Just going to throw that on there. So we got a nice rebound off the median line. You can see your double bottom structure just like you see on the chart. And it's not overbought here on the 3-day chart, guys. Let's look at this on the daily. On the daily, you're not overbought either, but you are in the upper range. Okay. It doesn't have to get overbought. You don't always see equities get overbought before they have these big declines. Okay. And I do have my signal set to 90%. And the normal people set it at like 80%. So I set it up higher for a little bit clearer signals. But this is an interesting stock to watch, and this is something on my radar. We'll see if this maybe you get some type of last impulse move up, get to like 215 or something. I mean, I'd really like to build an entry because this was such a nice money maker last trade. Let's talk about Palantir and we'll talk about the metals and wrap it up, guys. So why are we talking about Palantir? Why are we talking about Palantir, Brendan? Well, because the past month, look at it right here on the highlight, up 91% in the past month. Let me explain the psychology of this. This is the cheap AI play. The stocks all over Reddit, the stocks all over different chat rooms. People love Palantir. You know, Palantir is also those orbs that they looked at in the Lord of the Rings. I'm a big Lord of the Rings nerd, but I don't know, for whatever reason, people like the company. The same reason they like Bed Bath and Beyond, GameStop, whatever, but they like Palantir. Has an AI play to it. It's a lot cheaper than getting NVIDIA. So you're seeing this massive move up, 91%. So let's go ahead. But this is an unprofitable company. That's something I want to point out to you, okay? Unprofitable company. But let's look at the charts because this is setting up for a nice trade. Now, because Palantir is a relatively new company, this is not a big chart, right? So this goes back to September 2020. So you don't have a lot of data history here. So they came in September 2020. And then what happened? Peak euphoria back in January of 21, right? The Palantir made its all-time high. Look at that. Boom. Look at that move up. And it's done nothing but drop since then. It got all the way up to, what is this here? This got up to $45 even, and now it's at $14, right? Came off this base, exited Wyckoff. I did a fib projection here from this first wave up, pulled it back here. You got the 1618 at 1482. You've spiked above that. The reason I'm watching Palantir, unlike Tesla, look where you're at on the 3-day chart. You're almost overbought. Got this, but Palantir has a huge wave of buying volume, which is why you got to be careful. Okay, so you're looking at 1482 to 1710, and you can trade this on SimpleFX. By the way, guys, everything on here that I show you, you can trade on SimpleFX. So 1482 to 1710 is your upside risk, and you've been struggling here at the 1618 at 1482, but you're getting almost overbought. But let's look at the volume. This is something that you need to see here because Palantir does have strong volume. So where are we at? Let's look at this. Look at the volume. You're getting 2 sigma, 3 sigma bars here on the volume. Makes sense, right? Because you had a big rush in, but this could be where it's petering out, capping out. Let's look at this on the daily chart. So daily chart, you did hit overbought on the daily, okay? But you hit it down here. Is how you get the divergence. So you hit overbought signal down here. When price was down here, you were overbought and you still ascended up. So you went from like 13 to over just about 13 to 15 in an overbought state. But look at your volume. Again, you're getting volume wave. You need the volume. You can see it here in your volume ratio. The volume ratio, you need this to start rolling over, but you do have divergence building with price here, and it looks like it's putting in a top. So do I like Palantir? I do like this for a short opportunity, but again, I like it towards the top of the range, up towards that 1521. I mean, again, this is a tight fib stop loss here at 1622. I always use ATR. We have the multi time frame ATR that we custom built for our room. It's one of the free indicators you guys get. I think you get 7 indicators now when you join. So I use ATR for my stop losses. I typically trade 2 to 3 ATR. So you guys can check that out. There's free ATR indicators on TradingView, but they're just not as good as ours. You get ours for free when you join. So this is something I am interested in building a short on as well. Kind of want to see what the NASDAQ ends up doing. But again, the NASDAQ looks like it's also putting in a top. And you got, 4220 to 40 to 4300. Talking about 80 points on the S&P. I like watching these trades, how they set up. Okay, so there's your Palantir idea. By the way, guys, if this thing drops just back to where it pumped from, let's just look at that real quick. Because we had a killer First Solar trade where we shorted at 231 and it dropped below $200, right? But if this thing drops, the reason you watch some of these garbage companies like this, then I say garbage, don't get all offended. It's a company, who cares? Unless you work there, then I'll accept your offense. But it's just a company, okay? But they make no money. Okay, they survive off of off of meme mania. If you just come back to where this thing pumped from, it's a 61% move. Okay, it's a massive, massive move, up 92% in the last month. That's why you look at things like this. Some of these companies, AI related, that make $0. Look at C3 AI. They make no money. They're moving like altcoins. Okay, so this is a reason to watch these. Real quickly, let's jump over to the metals. People are asking me where would I be interested in shorting the metals. As you guys know, I shorted above at 2058. Let's just do a simple fib retracement here. And I typically look at rebounds at the 786 level, which is 2038 up here. Like that level, you should be poking your head out above this little mini cough structure. Obviously, the higher, the better. What you're doing now, let me take this fib off. You can see you're hitting the fib at 1983, which is a 382, which lines up beautifully with what? Your mini cough structure here. Let me zoom in so you guys can see that. So you fell down, and this is that revert. This is a 3-day chart, guys, but look at the shape. Let me turn the magnet off. If you look at this shape, remember, you exit your little mini cough, you come back up, you test it for 2 3-day candles. That's a week. You fall down, and now you're pumping back up for the retest. If you fail this retest and fall down again, that can be your pivot to the downside. If you do break back in here, then you're back in the trading range, and you want to watch that level above 2032. So you want to watch that 2038 at the 786 fib. Obviously, if it got higher, those are entry possibilities. Gold and silver moving with the markets, right? They're moving with the markets, going to repeat that GFC cycle. Let's look at silver real quick. Same thing, guys. Shorted up here at 26. Let's just take a move down here for you. So this would call the 786 here is a lot higher. It's at 25 spot 39. Silver, you just need to be careful. Silver is much more parabolic than gold. Looking at your 3-day chart, you're not overbought, you're not oversold, you're just below the median line. You got a little J hook going here. You got above your 2-year trend line. I would watch these levels, the 24 spot 35. Watch the 618 at 24 spot 81, and you'd be doing some type of move like potentially this, okay? Like that type of move. But remember, I showed you this last video, but the metals really like to make these double tops, and you already made this here on a 3-day chart. So just looking at the macro structure, but I don't like silver down here at all. It needs to come up more for me to be interested. Same with gold. 2038 is what I'm looking at on gold. Guys, quick video, quick for me anyways. Hope you guys have a fantastic weekend. I will talk to you all once again next week. Take care, everybody.